Hello, I'm Stanley Iezman. I'm the CEO and Chairman of American Realty Advisors, and we're here today to talk to Sabrina Unger, our Managing Director of Research and Strategy, on a topic that's very important to us, which is housing affordability in today's world. Housing affordability means a lot to a lot of different people, and they interpret it very differently. For you, and when you think about housing in today's world, what do you think housing affordability is, and how do you translate that to an investment strategy?
So, housing affordability, by definition, is simply measuring the percentage of a household's income that's going to rent. The typical benchmark or threshold that you want to be below is 30%. So, a simple example is a household making $100,000 a year could theoretically afford rent up to $2,500 a month and not be housing cost burdened.
So, if somebody is making more than that is spending more than 30% of their income on housing, is housing cost burden. How prevalent is this in today's world, and how significant is this to the community?
So in 2022, the median monthly rent nationwide surpassed $2,000 a month. At the same time, median household income in the United States is about $78,000. So again, we're using that rent to income ratio. We're right at the 30% threshold, right? So we said anything above that is rent burdened. So effectively, for the first time in 20 years, we are nationally rent burdened, right? And so it's important to remember too that median rent number, so that $2,000 a month rent, that's including low density, low growth places that are naturally going to have lower rents. It's not really reflective of rents on the ground here in LA, New York, Raleigh, any of these high growth markets where the majority of job opportunities are. And so in real numbers, over 19 million US renter households are paying more than 30% of their income just towards rent. So that's a pretty staggering number.
That is pretty significant. So, how did we get here? What caused all of this?
If you look at housing costs, so the actual cost to construct, whether it's a single family home or a rental building, so things like lumber, labor, steel, the taxes that we pay on our homes, the money that we have to, spend to manage these buildings, all of those costs continue to go up, and they're going up faster than renter incomes. So in order to be able to justify building new apartments, the rent level that justifies it continues to go up. And as we've said, rents are growing much more rapidly than income. So in a simple math equation, the numerator, which is people's income, is not growing as fast as the denominator, which is rent, and that's creating this affordability issue.
So, in high cost markets like Los Angeles or New York or Chicago, do you think that the politicians are really thinking about this and understand that issue as they try to develop policies to address this?
It's a little bit of a catch-22, right? They want affordable housing, they want accessibly priced housing, they know that there's a shortage of it, but at the same time, they don't want to be giving out necessarily handouts. They're fiscally challenged by virtue of the fact that their taxes have gone down, their revenues have gone down in the sort of post-pandemic world. And so it's really challenging. They are acutely aware of the challenge in their cities, but it's not so easily solved as we've seen.
So what we have seen is over the last several years is that rent growth has grown much higher than it normally has. It's been rather significant in terms of the rent growth. And we see this you see the headlines in the newspapers every day about this. How do you think that we should be thinking about that rent growth and housing in today's world from an investment standpoint? Do you think it's going to continue, or are there going to be political pressures to stop that?
Most landlords, like I said, are raising rents really out of necessity just to maintain the quality of their buildings. Now, that's not to say there aren't some predatory practices out there, but by and large, rent growth is really a function of broader supply-demand imbalances. So I don't think it's, viable or realistic to assume that rents don't continue to go up. Now, there are certainly jurisdictions that are starting to talk about things like rent control as a mechanism to try to slow the pace of rent growth. But academically, and we've seen this throughout the world, not just in the United States, rent control typically has the opposite effect of what it wants to do. Whereas governments are trying to maintain affordability, what it ends up doing is squeezing out the incentive to deliver new supply and exacerbating affordability. So although there certainly will be cities that will continue to contemplate it, there are a lot of challenges to the effectiveness of that approach.
You and I have had long conversations about the notion of affordability and housing in our investment committees. And we talk a lot about the idea that essential housing, which is more affordable for the middle class earner rather than the renter by choice, as opposed to the renter by need. Do you think we have the ability to be able to build our way out of this in urban areas where there's a high cost of land and a high cost of construction?
I think we have to be very strategic and creative, especially in high cost markets like LA, like New York, Boston, any coastal market, even some of the sort of Sunbelt markets are becoming increasingly unaffordable, right? So that's going to involve things like manufactured housing, prefabricated units. We're starting to see that there might be an opportunity in what's called accessory dwelling or accessory residential units, so ADU or ARUs. For a lot of people, they're probably more familiar with that type of housing by its colloquial name. So it's an in-law suite or a backyard cottage or a granny flat. But really what it's doing is it's taking single family plots and allowing greater densification by adding essentially a standalone home in the backyard, right? So it's increasing density. These are typically lower cost to rent by virtue of them being smaller. And so that is one potential solution that we might be able to sort of go down that road when we want to solve this issue.
So one of the knock-ons of that is the idea that the local community is resisting that because of the fact that they don't want their streets to be burdened with additional parking. There's demand on the infrastructure that is far beyond what everybody expected. There seems to be some kickback in this in certain communities, and you're reading about it in the paper. Do you think this has legs to it and that it is going to be something in the future, particularly in areas like California where there's a massive shortage of housing?
I mean, I'm sure that there will be certain neighborhoods that will win that fight, that will say we don't want densification. The acronym is NIMBYism, not in my backyard. I think most people, if you ask them, does this country need more affordable housing? I think most people would say yes. But if the next follow-on question is, okay, can it be in your backyard? The answer is usually no. So again, I think local municipalities may have to step in and try to do some creative rezoning or incentivize these communities to accept the fact that this is actually better for the entire community to be able to house people across the income spectrum. But it still remains to be seen. It's early days.
I like your idea that we need to be a little bit more creative in the idea of doing manufactured housing and some other alternatives. How do you think that investors are going to incorporate that into their investment strategy outlook? Right now, most of us think about multifamily housing as vertical subdivisions that are going up in terms of four-story multifamily projects. How do you think we should think about that in terms of, for example, SFR and in flat communities where there's horizontal work that is going on as well?
I think our investors need to not look at it as an either or. So it's not, I'm either having an allocation to traditional multifamily or single family rental or manufactured housing. We really need to look at residential investing across the spectrum. So if you only had student housing, you're only capturing renters from the time they're 18 to 22. And if you only have single family rentals, you might be capturing them from 30 to 45. So if you have diversification in your residential holdings, if you have some urban apartments, some garden style, low density single family rentals, and some of this excessively priced product, you're effectively setting your portfolio up to capture a greater share of the renter cohort and keep them in your sort of rental portfolio for longer periods of their life. And so that, I think, is a great diversification tactic for investors.
Does our conversation change if we start thinking about investing in the multifamily area in affordable markets such as Austin or Atlanta or Charlotte, as opposed to the high-priced markets of Chicago, Los Angeles, New York, using those as a proxy?
I think the ability for us to deliver certain types of product is dictated by land availability, by costs, But if you look at the numbers, every single market has a pretty deep pool of renters that are housing cost burdened. So there is an opportunity, even in markets that traditionally we have thought of as being relatively more affordable than the coast. So, Charlotte, Raleigh, Tampa, Orlando, these were all markets that historically people moved to because they were cheaper. But the reality is rents have really grown so quickly in those markets too, that now there's an opportunity to serve those particular households by going out into lower density parts of the market and delivering more accessibly priced products. So I think it doesn't necessarily change the conversation about whether there's an opportunity or not. It's just how do we deliver on it?
That's a great answer, and I want to thank you. And I think that given the fact that we have such a shortage of housing all around the country, other than the rural areas, this is going to be an interesting conversation to track over the next year.
Absolutely.